Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on ospreystrategic.com as well as stockcharts.com. So lots going on out there. It's really a difficult market to judge here. Can we just walk through a banking crisis and come out the other side? And so far it seems to be yes. So it's a pretty interesting state, and I've got some interesting charts to show you here in a second. So today I want to talk about consumer discretionaries that's starting to be on the move. I think most people know that Tesla had a pretty strong Tuesday and kind of pushed to the upside, and that's one of the largest companies in that group, or in that sector, so it's starting to move higher. But again, the one thing we need to watch for is just studying the overall market here and evaluating the risks of the commercial property market. That could be another big anchor here to try and stop our move higher. Anyway, what I want to cover off is the markets. As I said last week, we're trying to start another rally. They did with the mega caps. They're widening out after starting with the mega caps, so that's pretty good. And I want to look inside this consumer discretionary growth area. If we are heading into a new bull market, then we should start to see consumer discretionary technology and communications lead, and they've been doing a pretty good job of trying to do that. But it's been pretty choppy until last Wednesday, when all of a sudden the NASDAQ 100 started to move. And so if you've got any interest, or if I can convince you of any interest over in what we offer at Osprey Strategic, feel free to head over to our homepage, and for just $7 you can try a 1-month trial of everything we do there, and we're trying to widen that out all the time. But I think you'll find the opportunities section particularly helpful. So anyway, give that a shot if it works for you. Here is a chart, and this chart is really, it's a screenshot. This is a calculation I do each week, just trying to figure out how many stocks are up big and down big. And what I'm doing by that is, obviously, if you have a lot of stocks being sold, then what you're looking for is a weaker market. And so that's one of the big things to be aware of. When more stocks are selling off, even though the indexes are rising, then you kind of need to at least be aware of that condition. So back in February, we had the indexes up down roughly 2% in that week, and we had almost 800 stocks being sold off more than 5%. So this is minus 10, minus 5%, positive 5%, and positive 10%. And then, sorry, I did that opposite. This is 10%, this is 5%, minus 5%, and minus 10%. So what I was trying to evaluate is just how strong the market is. So February 24th, we had a big surge of selling. And then in early March, we had a move up, but not as big as the move down the prior week, or in terms of net selling. And then March 10th, we had an absolutely huge sell-off that week, and we had almost 1,800 here and over 900 here, so 2,700 stocks down pretty meaningfully compared to very few up. And even last week, even though NASDAQ was up 6% and the S&P 500 was up 1.5%, what we saw there was we still had almost 800 stocks being sold off and another 400 stocks down 10%. So between the two, over 1,200. And yet you look up here and we would have had the same sort of thing here, except in this case, the indexes were down 2%. And in the lower case here, the NASDAQ was up 6%. So that's how dominant the large cap buying was, even though we had huge selling underneath the surface. Now, I reran the numbers after Tuesday, and it's already flipped, and it's almost a 10-to-1 to the upside. So we had 113 stocks moving up over 10%, and only 32 stocks moving down more than 10%. And then we had 675 stocks moving up more than 5%, and 71 stocks moving down 5%. Now, it's not the week's end yet, so that's after Tuesday's close. So just trying to keep an idea of what's going on here. But right now it's heavily skewed to the upside, even though the indexes aren't moving that fast. Now they're still having good days, but it's quite interesting just to see, the change in what's going on underneath the surface and trying to figure out if we can grab a foothold here and move higher. Okay, let's head over into the charts. And what I want to show, first of all, actually, let's talk about the indexes and then go from there. So here's the S&P 500, and you can see our March 6th high. The NASDAQ is already above that March 6th high and did make it above there last week, pulled back down to end the week, and then fired up again to start up. And the big thing I think I want to notice here is we are making a higher low on the NASDAQ here. Our PPO, pretty much you can draw a straight line under here. This is a textbook bull market bounce, and hard to argue. Now you have the 20 above the 50, above the 200. That's like a very bullish sword order, so it's hard to argue with that at all. And you're seeing the NASDAQ really starting to outperform the S&P 500 since the beginning of the year. In February, really until the first week of March, which is when most of this sell-off happened, we saw the NASDAQ underperforming, and then all of a sudden it's really started to ramp up. And on this scale here, you can see this was minus 4%, and this is also an area where, so it had underperformed going back to the beginning date on the chart. But what we really want to notice on this particular case is that the chart is trying to break out to the upside, and now we're testing prior highs. So this is a pretty interesting place for us to pay attention. It doesn't necessarily mean anything bad is going to happen or whatever. It just means that we need to be careful and make sure that it does break out. So we've got the Fed meeting coming up here, and we'll see. I think everybody still expects a Fed increase. They feel like they've kind of got the damage control around the financial sector under control for now, and this chart looks like it wants to move higher. When we look over at the S&P 500, what we see here is the scooter ranking, and you can see this NASDAQ scooter ranking has gone all the way up to being one of the best ETFs out there, and the S&P 500 is just in the range it's been for the last 6 or 8 months. And the big thing that we're watching for here is this break of this downtrend, and really that happened on Tuesday. So that's good, and we also got a positive PPO cross here at the bottom. So when we add it all up, the charts are looking bullish. We head into a Fed meeting with a little bit of uncomfortability as to how things will go. Again, I don't think the Fed is trying to be difficult with the market. They're definitely trying to fight inflation, and if one of the byproducts of that is a stock market that struggles a bit, I don't think the Fed can control that. So they're working hard here, but what we've got, this is interesting. We've got a green candle starting to show up on the NASDAQ here, and on the S&P 500 just started to get a green candle. So both of these markets are trying to show us that they want to go higher, and it's really, really, really difficult to argue about that. One of the things that did happen over the last couple of weeks was the S&P actually broke the PDF uptrend and moved down, and now we're coming up against the bottom of this resistance line. So we'll see if it can break out to the upside and start getting back in what we would call bull market mode. So watching for that. The NASDAQ stayed in bull market mode, so that again is another positive that's working well for us. Let's jump over into the consumer discretionary area. And what I want to show is last time I went through this chart list, I did it and I sorted it by industry group and just tried to show the different industry groups that are out there. But what you see here, this is the numbering system here is the order of the stocks I looked at when I looked at them last time. And I think this is really important just to see this. Here's one stock that was the top of the apparel retailers when I looked at them last. And now here we are, it's gone from being one of the best to one of the worst. So the scooter ranking, the higher it is, the better. And it's really telling you how your price action is on your stock compared to other companies of similar market cap, or at least large, medium, and small. So when we see this big change, that's one of the things that makes it hard. But one of the other points I would make is that these top stocks in here stayed top for quite a while. So these three, I would say, got weaker. 62 isn't very good. But here's Foot Locker and Signet Jewelers. They're doing okay. So anyway, a lot of the strong stocks stayed strong. And if we go down to the bottom of the apparel retailers, you know, here was Nordstrom and Express, and they were both very weak then. They're still weak. So this is a good way to just kind of judge what's going on. Now, what I want to do is go and take this order system off of the charts and then go sort it again. And let's just go look at the top stocks across the sector. And again, this is so easy to do. So you have a chart list with all the consumer discretionary stocks in it. And then what we do is we can just take these numbers and sort it any way we want. So we go into the edit mode, we say select all, and we click remove numbers from this chart list. Okay, now that we've got that done, you can see the bar up here. We're going to go back into the summary mode. And the reason we go back into summary mode is because we need these columns to decide how we want to sort it. But in this case, I'm going to sort it by industry group, and then sector, scooter ranking. And the idea being we'll be able to pull all of the top scooter ranking from all of the different industries, put them together. So I think that's a pretty helpful way to look at it. And just standing back, we can look quickly and see recreational products are up in the top here, travel and tourism. So a lot of that's going really well. And then home construction is still one of the top ones up here. I've been watching that one closely to see if they're going to get hit with some of the financing issues for new homes. But so far the charts have been resilient. So now that we have this kind of laid out the way we want, now what we want to do is hold this sort order. So we go all the way to the bottom. And we just say number in sorted order. And then by doing that, it's going to put the numbers back in front of the names on all of these stocks in the order that we've selected. Okay, so now let's just go take a chart list view of all of these and work through them. And one of the things you'll notice about the scooter ranking is it's a longer term time frame. So one of the big positives in it, it doesn't really take kind of short-term movements, but in this particular case, the stock had hit new 52-week highs. I would just say it's been sideways since the beginning of the year. Hasn't been able to kind of maintain its uptrend, but at least it's still been a strong stock. Now, here's one that has changed. It was really terrible all of last year, and it started to get fired up. And I don't have a clue what they do, but look at the volume that came in today as this thing fired out of this base. So that looks pretty good and obviously on the move. Manchester United, the football club, things are looking up for them. The PPO momentum curve is starting to turn higher, and it's really been consolidating in this range. So we'll see how this breaks out to the upside. Melco, another big gambling house. And if you have a chart set up like this and you're wondering what their group is, what we can do is we can go in here and we'll just add the full quote button. And by doing that, we're going to get the little header across the top that tells us the industry group, and we'll just say apply style to all. And by doing that, that's going to put that data up there for us. So let's go back into view all mode, and should be, I'm not sure why that didn't work for me. Let me try that again. So we're going to go here, going to go down, and we're going to say full quote, hit the update button, and then we've got that little box up here. We're going to say apply style to all. Okay, and now when we go in here, what we should see when we hit view all now, again, going back into the same sort order, we're looking, and now what should happen is we can just see which particular group, all in consumer discretionary, these are in. So as we go through here, Manchester United. Okay, so here's Melco, and again, you can see gambling. And then Lennar Corp, this one is testing its prior high. So I think this is a really interesting place on this chart. I want to make sure it breaks through, and I think if it rolls down right here, that's going to really be an important signal if you're owning those names to kind of be careful. Red Robin Gourmet Burger, this thing hasn't been in an uptrend for a long time. Anyway, in the last year, or since the turn of the year, it's been a double from 6 to 14, or 13, so that's a pretty nice move. I don't know if they've changed their menu or something, but that's really starting to cook. And then here's another one where it's just kind of choppy sideways. So for me, that isn't kind of the trend I want to look for. Here's Trip. Now what I like in this particular one, if you just drew a box around here, if it can start to break out to the upside, that's going to be very, very beneficial and kind of really change the chart from being, grinding sideways, a bit of a move, and then grinding sideways to breaking out to the next level of new highs. And again, travel and tourism has been one of the better ones. We want to see that chart keep going. Solo brands, this one just started to get going in the last 2 weeks. Really nice change, so maybe they bought something or something like that, but it's starting to work. Vera Bradley, high-end retailer, trying to move up and above the consolidation areas, so that chart looks pretty nice. Pulte Home, same thing here. The home builders, I'm definitely not comfortable that group continues to go higher, and I could be way wrong, but what I'm watching for on this particular group, this is the pink area in the chart that I want to underline here. But I do not want to see this trend line break right here. And I think if it does, these stocks are going to move meaningfully down. So that would be a problem for me. So I want to make sure that this uptrend continues, and the moment it starts to relax, I'd probably be out of those. Just because the interest rates are typically a headwind for their industry. And so if it does start to signal on the charts that they're going to change and stop their outperformance of the S&P 500, that gives institutions a reason to start selling them, and I'd be out. So here's Wynn Resorts. What you see again, this chart's been moving at least higher since the beginning of February, consolidated, briefly shot up in early March, came back and is going sideways again. I draw the trend line under here. What I want to try and find is some stocks that are starting to outperform rather than having been outperforming for 3 or 4 months. I want to use this new change. If we're in the new leg of the bull market, then we should start to see some stocks break out of bases. This chart looks like a buyout, so we'll just delete it. And then Crocs, this chart continues to work. It really had some big moves, and you can see it really trends. And here it's falling, here it's rising. So if this starts to lose its trend, and it's pretty close to breaking its relative strength uptrend. As long as it could turn higher here, that would be helpful. But if it can't, I think I'd be moving on. Build-A-Bear, this is just too choppy for me. Lightinthebox Holdings, trying to get going right here. After a big thrust a while ago, I think the one thing is the volume's a little bit light on it. It only does an average of 53,000 shares a day. MercadoLibre, this one's been quite an exciting stock. The scale on the side here is 600 to 1200. So this thing has had a double since July of last year. And again, it kind of moves up in boxes, and this is a Nicholas Darvos thing where he talked about a stock will build kind of a price range and then it breaks out of it, and you want to be in it for that move. And then it'll go up and it'll set up a new box, and then you go up here and it sets up a new box, and just kind of watch it window climb higher. Anyway, these charts are starting to look okay. So my purpose here, again, is to show you, first of all, how to manipulate the data. The second point is to start to show you some of the charts that are starting to work. So this Cooper Standard Holdings looks like it's pulling back and wants to try and turn higher. When booking, this one's trying to break out to new 52-week highs. It's quite an expensive stock on a per share basis, up around 2,600. Again, 27.15 is the prior high, but to me, looks like it ran up to it, pulled back, and now wants to take off to the upside again. And if you get that, that's a pretty nice place to be. where most people who have owned the stock for last year are all profitable, makes them less likely to want to sell the stock quickly. Potbelly Corporation have never been in one of the restaurants. Anyway, obviously the chart's doing pretty well. Was 550, ran all the way up to, call it $9, back down to 775, and looks like it's about to start its next leg higher. Academy Sports just gently climbing higher, but nonetheless still a nice move. Decker's Outdoor, looks like these shoes are going to start to go higher, and I think Nike reported after the bell, and I haven't checked out how the chart responded. So here's Wingstop, and again, grinding sideways in here, now finally breaking out. This is new 52-week highs with the exception of this one candle, so I still like the stock. Looks pretty good, and you can see a nice uptrend building here. Taylor Morrison, back to the home builders. And again, this had a really nice uptrend, started to chop sideways, and now we'll just see if it has any more power to go higher or does it roll over here. TriPoint Homes, another home builder. This one still looks to be very much in the up mode, and it always helps that the last candle is the highest point on the chart. So that looks pretty solid. And again, very close to 52-week highs, so pretty good. Ferrari testing prior highs. I'm not real enthused about the auto charts, but when I look at this one, whoops, that really wasn't what I wanted to do. Let's just go back. When I look at this one of the things that I notice on here is the PPO momentum. Whoops, don't know why that's doing that. PPO momentum trend here is heading higher, and to me it looks like this is just a nice place to catch it for its next bounce on the way higher. So it's a pretty good looking chart, and again, what this is saying is each one of these waves, the chart is building more and more momentum to the upside, and it just looks pretty strong. So nothing wrong with that. Let's just kind of step back again and look at a couple of things here. I just want to go out of this and get into the I'm going to scroll to the top here, get into the summary view. So what we need to think about here is the stocks that are doing well, and then the other way I like to look at it are the stocks that are just starting to get their scooter ranking going above 25. And so that group in here, this is also a nice area to go shopping in. And again, what it is it's the stocks that have been out or have been poorly performing, and then they start to take off to the upside, and their price action is starting to improve. So they work out, they're actually starting to change from being awful to being better. So if they were just hanging around this level, I'm not as interested. But if they were horrible and are now starting to perk up and get better, then to me, that's a much nicer place to get online with these charts. And hopefully you'll find some ideas in there that start to work for you. Again, I've shown you how to go in, create a chart list with consumer discretionary. I've done that in prior shows, but this time I showed you how to clear off the old numbers, put on the new numbers, sort it any way you want, and then go in and look at the charts and then try to find the setups that you're starting to like. I particularly like when it moves above 25 for the scooter ranking, and let me just go grab a chart here. So this chart is a scooter ranking. It's just sitting down here below. There's nothing really worth looking at on this chart, but I have this blue line up here, and when the chart can start to move above that, that's pretty helpful. So let me just go put in Tesla just to wrap up. What you see here is Tesla's had one of the lower scooter rankings, been awful. Can it finally get fired up and get going? Well, that 7% today helped a lot. And the one thing that you'll see here is it's trying to bounce right around its zero level on the PPO. Typically, that's a nice place to get on. So it came off an awful low, came up, and looks like it wants to turn higher. And you do have this setup where we did this before, and then it rolled right back down. So that's the only thing you want to make sure of, is once it starts moving here that it continues its move. But when the stock really has a strong scooter ranking, especially when it changes from ugly to great, this can be a really important one. And if I just take this from behind the indicator to above, what you'll see here is, we want to see this stock get back on track and become one of the leadership stocks again. Okay, so thank you for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern Time. You can also see the recording on Stock Charts TV YouTube page. Thanks, everybody. Have a good week. Bye-bye.
Hey, Grayson Rose here with Stock Charts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.